What if I told you that right now? Billions of Kenyan shillings are moving into a secret weapon for cautious investors? This is Kenya News Update today. Coming up, you'll discover which money market funds are dominating the market, why bigger isn't always better, and how you can make your money work smarter. The Capital Markets Authority just dropped its explosive report for December 2025, and the numbers reveal a seismic shift in where Kenyans are parking their cash. Meet the Sanlam Unit Trust Scheme. For years, it's been the undisputed heavyweight champion of the money market fund world, and according to the latest CMA data, it's not slowing down. Sanlam maintained its number one position, commanding a massive 19.2% of the entire market. But here's the twist. Its assets grew by 14.8% to a staggering 130.5 shillings billion. That's over 130 billion shillings in one fund. But the real story isn't just about the top dog. The chase for second place is where things get intense. Standard Investment Trust Fund ranks second, holding 15.03% of the market. And here's the part that will blow your mind. It posted a 32.6% growth rate, more than double Sanlam's, increasing its assets to 102.1 shillings billion. That's explosive growth. And then, something shocking happened. CIC Unit Trust Scheme followed closely in third place with 14.38% and assets totaling 97.8 shillings billion. But despite its strong market share, it only saw a modest 4.7% growth. The contrast is stark. You have a giant holding steady, a challenger growing at breakneck speed, and a strong contender barely moving. This is the high-stakes game of Kenya's low-risk investment world. The top five is rounded out by NCBA Unit Trust, Scheme in fourth with 7.98%, and Britam Unit Trust Scheme in fifth with 7.07% after a solid 16.8% increase. Other notable names in the top 10 include Old Mutual Unit Trust Scheme at 4.15% and ABSA Unit Trust Funds at 4.09%. The continued rise in assets under management across the board signals a growing wave of trust in MMFs as a safe and convenient investment option for everyday Kenyans. But here's what nobody's talking about. The CMA itself issued a critical warning. Larger funds are not necessarily the best performing. Let that sink in. Just because a fund has the biggest pile of cash doesn't mean it's giving you the best returns. The regulator is urging investors to look beyond size and evaluate MMFs based on their yield value, the actual percentage return you earn. This is a game changer. It means the number 4 fund could be outperforming the number 1 fund for your specific financial goals. The top 20 list also features Etika, Madison Unit Trust, Ziadi Money Market Fund, Nabo Africa Funds, Feda Unit Trust Funds, and rounding out the list, Dry Associates Unit Trust, Arvicap Unit Trust Funds, Stanbic Unit Trust Funds, and Lofty Corbin Unit Trust Scheme. This isn't just a list of names. It's a map of where financial confidence is flowing in Kenya. So what does this all mean for you? The implications are huge. On one hand, you have massive, established funds offering stability. On the other, you have agile competitors posting incredible growth. The controversy lies in the choice. Do you go with the perceived safety of the giant or chase the higher potential yield of a faster-growing fund? Some say stick with the leader. Others say follow the growth. But the unanswered question remains, which strategy will protect and grow your hard-earned money in the long run? We started by asking where billions of shillings are moving. Now you know the leaders, the challengers, and the critical warning from the regulator itself. Do you think bigger funds are always better, or should Kenyans focus solely on yield? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking financial news that impacts your wallet.